Leaders of Tomorrow, 10 years of recognizing excellence, 10 years of identifying champions and bringing you the most expert voices in your growth journey. I'm Sunanda Jayaseelan on the show tonight, an expert as far as what's really going on in the markets and reading really the cues that we've heard from the finance minister as far as the budget is concerned and the impact that we're likely to see on the markets, and also most importantly on how you make and manage your wealth. I'm in conversation today, Lakshmi Iyer, CIO Debt and Head of Product, Kotak AMC. It's my pleasure to welcome Lakshmi Iyer on the show today. Lakshmi, thank you so much for taking the time to join us on the Leaders of Tomorrow.
Thank you, Sunanda. Pleasure to be here.
I think a good place to start, of course, and while it's been dissected quite a bit, I would love to get your quick takeaways on what you made of the budget announcement first up, Lakshmi, and then we can, go into some of the other cues as well.
Sure, Sunanda. I think for us, when we went through the budget document, when we heard the finance minister speak, it clearly spelled out a slightly long-term vision from an overall macroeconomic development perspective. There were no quick fix solutions which were offered. They were, very, very conservative when it comes to giving projections as far as the income side of the balance sheet is concerned. They have been fairly generous with respect to the expenditure, which is the capital expenditure or the pepping up or the propping up of the entire investment cycle is concerned. They have given specific thrust to infrastructure, digitization. They've not been very, very I would say lopsided towards the taxpayer. So I think that is, to my mind, a summary of what this budget was. There is an ad or tagline which says, "Bujaye sirf pyas, baki sab bakwas." So it just kind of encapsulates that mood right now, where there are no, you need something extra, okay, you also take it. It's not a people pleasing kind of a budget. So yes, it's fantastic from a slightly long term perspective. And yes, markets pretty much gave their thumbs up yesterday as we saw how the markets actually reacted. I'm talking about the equity markets. Bond markets is a different story altogether.
One of the key takeaways that we heard from the finance minister, and the key headline really, and she started off her announcement by saying, this is a vision for the next 25 years. Was there enough you felt in the conversation and in the takeaways, not much being announced as far as, say, taxation in the hand of individuals is concerned, not much being announced on healthcare. Yes, an impetus on, infrastructure for sure, GST, and, the announcement that we heard from the finance minister, something to cheer about. But do you think this was enough for the long run?
See, when you give such a long-term vision, Sunanda, you need to break it down into baby steps. And as I said, there are no quick fix solutions. So if someone were to say and dissect and say, okay, next 25 years, what's in it for me? And if everyone starts looking at it from that perspective, it becomes very difficult. For example, someone was who was looking at it from a consumption perspective to see if he or she got something more on the disposable income side. Obviously, the budget would not have satiated or his or her palate. But the point is that whichever segments, for example, required a thrust, whichever segments which the people in the industry, for example, the opinion makers or the people who are skin in the game, the manufacturers have been speaking about, I think on those grounds, the budget is not really disappointed. And ultimately, the backbone of any economy, if finance is the lifeline, you have a backbone in the form of infrastructure. So what kind of thrust on the capital expenditure side you will do such that it actually works towards that milestone and then finally a goalpost is reached. I think those were very critical things. We have seen pickup on the credit side, but there was still an extension of this ECLGS line, which has been pretty effective. So for example, the extension of the ECLGS up until March 2023, though we know that there is a reasonable pipeline and pickup in the bank credit, etc., visible, all that gives us reasonable, and these have been opinions voiced by the stakeholders of the respective industries. So I think the budget has heard out, each of these stakeholders, and it's quite visible that these are milestones which need to be reviewed at periodic intervals. And then you start obviously planning for the bigger vision, which the budget has so well articulated.
So since you're talking about the emergency credit guarantee line, there's been an extension, but there's also been an expansion. And the expansion coming for a lot of your services industries, which have continued to struggle. We quote a survey here on the Leaders of Tomorrow, Lakshmi, where nearly 40% of businesses, down of course from 70% in 2020, but even at the mid of 2021, 40% of MSME surveyed said that they're continuing to feel the worst really of the pandemic. This expansion and the extension of the credit guarantee line, do you think it's going to have a meaningful impact as far as working capital, more money in the hands of small businesses, and also, perhaps the NPA situation in the midterm?
Absolutely, Sunanda. I think that is what the intent is. Hospitality sector, for example, has been, ailing, and it has been in the eye of the storm because of this. The microfinance sector, for example, has seen reasonable support because of the scheme. So I think extension and expansion, I think that is very, very critical. And 12 months is a reasonably long time. I mean, you've extended it up until March 2023. And there are, I would say, more than green shoots of things getting back to normal. And gradually, with this pandemic morphing itself into an endemic, I think it's a matter of time that life gets back to normalcy. So in that sort of a situation, extensions like these and credit line, is extremely important for these entities. If you really want to nurture them and ensure that it's like watering the plants, when you're on vacation also, you have to ensure that somebody is there out there, behind you to water the plants. So I think this kind of a nurturing, especially for the ailing sectors, definitely augurs well from a slightly long-term perspective. And let's accept that some of these small enterprises have been reasonable torch bearers in the past couple of years, and they have been at the forefront of digitization as well. So yes, it certainly will help.
Okay. You started this interview by talking about the markets. The markets have been a bit of a sell-off, but yesterday, of course, reacting to the announcement that we heard from the finance minister, in the mid to short term, what do you think is going to be the impact on India's capital financial markets because of the budget?
It looks like the fiscal deficit numbers have not really gone down well with the bond markets. We have seen yields rising. The 10-year benchmark bond yield yesterday closed at about 6.82%. And this means that the overall cost of borrowing for corporate India is also set to rise. The word here, however, is gradual. So if it happens in a very gradual manner, I think that cost can be absorbed by balance sheet. And of course, you are seeing earnings growth, etc. So this cost will not really hurt too much. So I think it's very important to see this happen in a very gradual manner, because if it happens abruptly, then obviously growth takes a little bit of a setback. So I think fiscal deficit, but I must also hasten to add, Sunanda, here that the revenue estimates have been very, very conservative. So there could be some amount of positive surprises, but yes, for now, the bond markets are more in a fear, while obviously the equity markets have been in a mood for a cheer.
I want to very briefly talk about sectors as well. Surprisingly, nothing much being announced as far as healthcare is concerned, but mental health did find a mention, which was very surprising and very welcome. We saw the announcement as far as infrastructure is concerned. No, surprises there. The solar industry found a mention. We did find mention of urban mobility and, the whole, really the mobility and the transportation space. 2 or 3 sectors that you perhaps are looking at, that you think will definitely see growth in the mid to short term. What would your picks be?
So clearly, again, this budget had no specific references to any particular sector to give a major fillip. But I would say, from a theme perspective, I think the capex cycle being, given a significant thrust. The capital goods segment obviously looks fairly good. Alongside that, the construction, the related infrastructure, the cement, specialty chemicals. I think all of these segments, I think sectors or themes which have been at hogging limelight for a fairly long period of time, and obviously have been wait for some sort of capital expenditure or capex led thrust. I think that thrust has been found yesterday in the budget, and looks like I think these are some of the themes that could be slightly long drawn themes which one could focus on.
Lakshmi, I have to take a very quick commercial break at that point. I'm back in just a moment. Welcome back. You're with us here on Leaders of Tomorrow, and tonight on our Wealth First special, I'm in conversation with Lakshmi Iyer of Kotak AMC. This budget is being, of course, billed as one that is going to perhaps help India as we are coming back on the path of growth. And I want to talk about whether you feel there was enough as far as the impetus for manufacturing is concerned. We were talking about the services sectors, but I want to talk specifically about PLI. The PLI, when it was announced, the intention was to give a leg up really to the manufacturing space. MSMEs on their part said not enough for them to be able to meaningfully participate in the PLI scheme, although it's over a period of years or for a few years. My question to you is, announcement on the PLI as far as the solar industry is concerned, but should there have been more to give any sort of meaningful thrust to domestic manufacturing?
So I think, if you see a couple of initiatives, again in the budget, clearly bodes well from, bolstering the PLI initiative. Yeah. They really want. For example, look at the EV space. I think the EV space and the battery swapping initiative, I think all this is going to give a huge fillip, even from a three-wheeler perspective. For example, it has been fairly all-encompassing. If one were to see, as I said, an overnight reaction or an overnight solution to each and every sector, obviously that becomes a little bit difficult. But these are some of the segments where there has been keenness, how to really improve the EV penetration, for example. All those things, we have actually set a target of, I think, around 30% in terms of EV sales penetration, and of course, even the commercial vehicle space. So I think all of that gives us feeler that these are, if executed well, I think the key is obviously going to be the devil is in the details, as they say. I think they have done reasonably well on that count as well.
I want to get your comments on the digital currency. I know everyone is waiting to see how that's really going to work, but your initial takeaways on that?
Firstly, I think the buzzword has been around how cryptos, how NFTs, etc., how it would get legitimized, given the fact that there were gray areas on that front. It is a matter of time, or it was a matter of time, that India also has its own form of digital currency, form and shape, etc. Of course, we will get to know in due course. But I think it's a step in the right direction, because that is where the alternate investment world is moving. Of course, in India, it could be very sporadic because of, say, issues on taxation. Even that, for example, they have announced that there will be a tax on cryptos, and that includes all form of digitized mode of trading or investing. So I think this seems to be acknowledgement of the fact where the globe is heading towards, and the fact that investors are also looking for alternate avenues. And if one invests in art, one invests in coins, one invests in various other things, this seemed to be a logical extension. So I think the digital initiative or the digital currency thought is pretty much how, Sunanda, the world central bankers are thinking as well. So I think it just makes sense to give it some form and shape and concretize that in this coming year.
Since you were saying world leaders, Lakshmi, I just want to talk, of course, about what's happening in the US. The US Fed Reserve announcing the start of a monetary normalization policy. I'm sure you've seen it. This is for the benefit of our viewers. America's national debt crossing $30 trillion as we speak. Trickle-down effect on the domestic economy, perhaps in the midterm, that you are expecting?
The world is actually looking at the US because US seems to be among the first to act from injecting steroids into the system to actually vacuum cleaning that with a suction pump. And I think this will happen world over. This will happen. This has already started taking place in India also, if you notice, where we have started normalizing the liquidity process. The resultant will be obviously lesser money available, fewer money chasing asset classes, commodities, etc. Because if you see in the US, inflation is at a 4-decade high, north of 7%, and the yields or the 10-year benchmark yields is south of 2%. So this massive gap of negative real rates is something which is very, very concerning. India is not in that dire of straits right now, but as I said, our process of normalization also has started, and asset class adjustments definitely will have to happen. So wherever there is froth because of significant liquidity, I think some bit of that froth has already given way. We've seen how indices in the US, how NASDAQ had corrected, that had been the harbinger of, quite a bit of these fortunes. We've seen those massive corrections underway. And I think that's something which can be extrapolated to the rest of the world in due course of time.
Even as we're talking about the cues from the budget, since we have you with us, I'd love for you to talk to our viewers about your views as far as asset allocation is concerned. Given what's happening in the markets, should you be looking at, rebalancing your portfolio? And if you are, how should you be looking at it at this point?
See, asset allocation is a lifelong process as long as you have allocations to both financial and physical asset classes. And especially at times like these, when there are whipsaw movement across asset classes, fixed income saw a reasonable good sell-off. And as we speak, also looks like that the interest rate journey is headed northward. So the typical tendency is to, exit loss-making asset classes and fund that money into the greener pastures. I think that's a complete misnomer, and that should be best avoided. So
Sure.
what we need to do is, as you go along this journey, keep doing course corrections on your own asset allocation. So if you started ab initio with a particular proportion and you've seen that proportion get lopsided because of market movement, go back to that so long as your objective has not really changed. And irrespective of whatever happens, keep gold only as a sparing part of your total asset allocation. Okay. Because it's a financial asset like equities, for example, which will pull up and aid in wealth creation, and the wealth, I would say, protection comes in the form of gold. So I think have that, and the stability provider with fixed income, I think that's a more rounded portfolio from a long-term asset allocation perspective.
Also, since we have you with us, would you have any specific strategies that you would want to advise our female entrepreneurs to look at when it comes to their portfolios?
Sunanda, we have the policy which is coming up, but agnostic of any event, agnostic of what gender you are as an entrepreneur or as an investor, I think there are strategies in fixed income to suit every interest rate scenario. So times like these, stick to low to mid duration strategies, which are usually around the 1 to 3 year investment horizon. Do have allocation to floating rate assets because of floating rate funds as the industry offers, because these are, they actually prove their metal, especially in a rising interest rate scenario. And then when you are investing in equities, do stagger investments. Because as an entrepreneur, you might have some chunky inflows as well. So try to stagger your investments and plan lump sum in strategies like balanced advantage, which allow for dynamic portfolio management, which you as an entrepreneur may not really have time to track.
All right, Lakshmi, thank you very much for taking the time to speak with us and our viewers here at the Leaders of Tomorrow.
Thank you.
Completely out of time on tonight's episode. If you have any feedback for us, you want to know how you should be looking at rebalancing your portfolio in this environment, All of that we will be covering every Tuesday right here on the Leaders of Tomorrow. Do stay tuned. For now, our contact details on your screens as we speak. Thanks for watching. Have a good night.